Welcome to the High Risk Payments Playbook, the podcast for partners and merchants operating in complex industries. If you're navigating chargebacks, underwriting challenges, compliance hurdles, reserve or volume limit challenges, and approval roadblocks, you're in the right place. Each week, we break down the realities of high-risk credit card processing, what works, what doesn't, and how to build sustainable payment strategies focused on revenue growth for industries where others struggle. This is where strategy meets execution. Let's get started.
Welcome back to the Payments Playbook, the podcast where we break down the details, challenges into the payments industry today. I'm your host, Rene, and today we're going to be diving into a very important topic, building a high-risk payment strategy that actually scales. If you work with high-risk merchants, if you already know, this is not just about getting approvals. It's about creating a sustainable, scalable framework that can adapt to evolving risk profiles, processors' requirements, and long-term businesses' growth. So today, we are going beyond the basics. We're going to be talking about what actually works, what doesn't, and how to build a payment strategy that can grow with your portfolio. I'm not alone today. Please join me in welcoming back Lissa to the show. She will bring us a strong perspective and a real-world experience in navigating with high-risk payments landscapes. Lissa, how are you? And welcome
I'm great,
back.
Rene. How are you?
I'm doing fine, thank you.
Good.
All right, Lissa, let's start with the foundation. When we talk about scaling in high risk, the processor you choose can make a break or can break everything that comes after. So let me ask you this. How does choosing the right payment processor make a difference in the way you scale your business?
Okay, so that's a big question, and it's going to require a big answer. So bear with me
Mm-hmm.
a little. The first is if you're a high risk business, which just to recap are, subscription businesses, even gymnasiums, things that you wouldn't think of as being high risk. If you're a subscription based business, you are certain verticals like adult and weapons and CBD and nutraceuticals, etc.
Mm-hmm.
If you have a high average ticket amount, so a high average sale amount, or if you are a merchant who has a goodly amount of time between when your customer pays for a product and when they receive that product. All of those circumstances make a merchant high risk. And frankly, you can be high risk in 3 or 4 of them at the same time, right? Which makes you ultra high risk. That's always fun to talk about, but that's another day. Choosing the
Mm-hmm.
right payment processor for a high risk business is crucial because you want them to have options, not only in the products that might be right for you now, but also have products that might be right for you down the road. And you also want them to have at least a small variety of banks who are going to do the underwriting. And that's more important than having a single bank for a couple reasons. So let's start there. If you work with a processor that works with, let's say, a half a dozen banks, likely 3 or 4 of them may not want high risk business, right? And so you
Mm-hmm.
want to have options so that you get the best package that you can from the underwriting bank. And by a package, I mean you want reasonable rates, you want little to no reserve, or being able to get your reserve back in a short amount of time, 3 to 6 months, maybe. You want the best terms possible, and you want a team that knows how to negotiate terms on your behalf. And so what that means is that you really want a processor who has experience in high risk verticals, who knows how to partner with their underwriting banks on the back end. And frankly, you want to make sure you're being underwritten, which I know we've talked about before that aggregators don't underwrite. That's one of
Yeah.
the biggest risk issues a merchant has is
Mm-hmm.
using an aggregator, a Stripe, a Square, PayPal, because they
Mm-hmm.
don't underwrite. And so their method of being able to reduce their risk is to hold your money and shut your account down. That's the single biggest difference in being underwritten. So you absolutely have to be underwritten by a bank, and by a bank who wants your business, right? So, like, if you're an adult product retailer, not all banks are going to want to work with adult businesses. So you want a variety of banks to choose from so that you have one or two who you can, be put in front of, and they can tell you what the terms would be, and then have a processor to help you negotiate those terms. So it's fundamental that you choose a processor with high risk experience. On top of that, you want to look at their product offering. And by that, I mean, you want to make sure that you have access and to the not only access, but, scalability with the suite of products that they offer. For instance, if you're a retail merchant, right, you're brick and mortar, you have a store, people walk in, you're retail, they hand you their card, you process their card, and they take their goodies and go. That is one
Mhm,
kind of processing, right? It's lower
mhm,
risk. If you are an e-com merchant, which is high risk just by the nature of it,
uh-huh,
you need a processor who can handle that, which means they need to be compatible with shopping carts, right? Because that's how
mhm,
you transact a card when you're an e-com merchant. And
sure.
they need to have products that you're going to want or need. Maybe you have issues getting approvals and
Mhm,
you want to prevent declines on the front end. There are products that can help you do that. Maybe
mhm,
you have alert or chargeback issues and you want a product on the back end to help you mitigate chargebacks. There are products that do that, and you want to make sure that your processor has a suite of products that are useful to you now and also useful to you when you grow. And so you should be having, and if you're not, they're not the right processor for you, but you
mhm,
should be having a conversation with your processor about what your intentions are in your growth plan. Like, are you going to open more locations? Are you going to move to an e-com store? Are you going to start to sell internationally, right? What is your
mhm,
growth plan? And talk with them about, maybe a year from now, I'm going to need this capability or that capability. And if they don't have it, and or if it's not on their roadmap, then they are not a processor for you, because having a long-term relationship with your processor is critical. You want
yeah,
them to know you when you dial in for support,
mhm,
because cash flow is critical, and them
sure.
understanding how critical they are to your business is very important. So, you want folks who have experience managing banks on the back end, underwriting banks and negotiating terms, and also that have products that you need now and that you might need down the road.
Okay, yeah, definitely. Now, you talked about underwritten. What happened, or once a merchant is properly underwritten, the next big level is checkout performance, definitely, for approvals.
Sure.
Because if they don't get approvals, then they're not going to complete the purchases. And of course, I mean, that's not going to be something that we want as a merchants.
That's
So,
right. No,
how
no
does a
approvals,
merchant
no sales.
maximize?
Yeah. Yeah.
um, how does a
Well, it depends if they're having issues, right? And that should be part of the conversation. If you are having issues maximizing your approvals, that should be a conversation that you're having with your processor before you
Mhm,
decide to go with them, even. And so, it should be a statement analysis. How many transactions did you run in a given month? What's your average? Are your numbers declining? Are they increasing? What's the behavior of your sales transactions? If you are seeing a decline in approvals, then that's a time to make sure you implement a product that helps you negate that. And there are
mhm,
several on the market, and they do slightly different things depending on what you need them to do. But you should absolutely be having a conversation and looking at putting one of those products in place, because conversion rates are the first step in getting folks over the sales hump, right? And they're coming to you, they have their card, hopefully they have money on their debit card or in their checking account or in their open to buy on a credit card. If they don't, there's not much you can do with that other than remarket them and hope they come back with a different card. But if they're having approval issues for some reason, maybe their AVS isn't matching, so that's an address verification system, which means when they put in their shipping address and their billing address, your point of sale or your shopping cart needs to pick up on that information and communicate it to the issuing bank so that it says, yes, we are an e-com store. And yes, the customer is entering their own information, but it's less likely fraud because they know their billing and shipping address, right? So we want you to match for that. The same with the CCV code. It should be prompting for your customer to enter their CCV code, that 3-digit code on the back of the card, and it should be
Mhm,
matching what the issuing bank says. So
mhm.
there are some tools baked into the process that you just need to make sure are turned on, because sometimes it's just a toggle, right, on your shopping cart, and
Mhm.
that they're being read properly by the issuing bank. And your processor can help you with that.
Yeah, absolutely. And that's a key element right there. Trust is everything, as you mentioned right
Absolutely.
now. And especially now in high industry, like, especially in adult retail or any type of product as well. Trust is everything. Now, how do you effectively build trust with customers from the first interaction that you have with them?
Yeah, a lot of it isn't even about having a conversation. It's when folks come to your website and they see things
Mhm.
like your SOC certification shield, right? They see that you are PCI compliant. All of those things matter. Security matters. You're communicating credit card data. Your processor should be encrypting and tokenizing data, which are, the security standards this day and age. And that's a fair question to ask. When my customer enters their credit card information, does your system encrypt and tokenize it? Tokenize it, which means that that data is not being communicated directly. It's being turned into a code that is
Mhm.
being communicated and then deciphered on the end of the issuing bank. They
It's
are
been
giving you
encrypted,
an
right?
approval. It's tokenized on the way back. And then your system is reading that token and saying, yes, you got an approval or not. So, those are some pretty standard functionalities, right, when it comes to processing. And also, it has a lot to do with the way your shopping cart behaves and the way you sell your product. So, do you have, like a lot of add ons at the very end? Like, so your customer says, yes, I want to buy this product. And then you're like, wait, you could also buy this or this or this or another thing. Or, people often do this. And it's upsells are great unless you're going a little overboard and you're diluting your transaction, right? So it's smart to have a conversation with your processor and say, I've got a couple add ons at checkout, and your processor should be saying things like, how many? And if you said like 8 to 10, they should be saying to you, that's way too many. You've got to scale that back.
Hmm.
Maybe one or two, right? Three at the very most. So they should be educated in those ways and how to getting people across the finish line by not overwhelming them. It also looks like you could do things like offer volume discounts or free shipping at a certain purchase price, right? I see a
Hmm.
lot of free shipping at $100. So you spend $100 on our product and we will ship it to you for free.
Hmm.
Or if you spend, $150 on product, we'll give you a 10% rebate on your purchase.
Hmm.
There are a mountain of different structures for
Hmm.
your purchase flow that can help you increase your average order sale amount, right? And,
Hmm.
at the end of the day, that's what it's about. We would rather have, $150 sales than $130 sales, right?
Yeah,
That's fair.
absolutely.
Yep.
Absolutely. Yeah.
Yep.
And now once trust is established, the next opportunity is increasing the value, like you just mentioned right now, of every interaction. And that's where the shopping cart becomes a powerful tool.
Mm.
Now, how can merchants better leverage their shopping cart's capabilities to
Mhm.
increase the average order value?
So make sure that you're offering every payment method that you want to. And by that, I mean all of the card brands, Visa, MasterCard, Discover, American Express, that you're adding wallets, Apple Pay and Google Pay, that you're offering ACH. Sometimes people are more comfortable entering their routing number and account number to their checking account because they monitor it every day versus credit card information because they don't monitor it every day, right? So you want to give options to your customers. Not the same two people don't feel the same way about how they want their transactions handled. Some people want discretion, like we were talking about adult products earlier. Sometimes folks want to know that you are going to have a very discreet identifier on your billing statement. So, what that means is when your customer gets their credit card statement, there will be two lines of information for every transaction they make with you, right? And those two lines of information hold usually like a transaction code and then your business name. And then the second line would have either or both, maybe a customer service email and a customer service phone number. And you want to make sure that as much as possible is in that descriptor so that when they get their statement and they see that they spent $139 at youneverknow.com, they might
Yeah.
go, we didn't spend what we don't even know what that site is, right? You never
Hmm.
know.com. Well, I didn't spend money there. But, if you're an adult store, you're going to want to be discreet, but you want to make sure they recognize their transactions. So you might want to put in your descriptor something like um adult store Maryland, adult store Minneapolis, right? Something that isn't like super specific, but
Hmm.
when they see something that says adult store, they're like, oh yeah, I was there, right? I spent
Uh-huh.
$139 there. Yep, check, check. They can
Uh-huh.
reconcile their credit card statement. They
Hmm.
know that nobody has behaved fraudulently and they recognize their transaction. Now, there are other industries that don't care so much about discretion and just want to make sure that they're um, 1-800 bagsforless.com is listed,
Hmm.
right? But
Hmm.
absolutely a good descriptor for your business and an email if you can get it in and a phone number for support is super helpful eliminating some chargebacks because they are initiated when customers don't recognize a transaction, right? And
Yeah.
they don't think they know you, so they're not going to call you. They're just like, somebody used my card and it's not me and I'm not going to pay for this, when in fact
Yeah.
they did.
Hmm.
So,
Hmm.
you can control a lot of eliminating chargebacks by just monitoring those kinds of things.
Yeah, and making these small changes, right?
That's right.
Um, and now, speaking of increase in volume or value, one of the biggest growth levers in any vertical is recurring revenue, right?
Mm.
So, what about subscriptions?
We love subscriptions.
Yeah,
What
yeah, we
about
do actually.
subscriptions? So, it's a very modern approach to monetizing your product or service, right? Is to offer it either in a bundle or in a subscription. So a great way to increase
Hmm.
an average order value is to do one or both of those things. So for
Hmm.
instance, for an adult store, maybe
Hmm.
you offer a bundle where you have some video instruction and a selection of items from your store that do a variety of different things that can be used together or separately. And you film a little video and you say, this is how, some folks do this, or here's some ideas about how to use these together, right? So that folks are just like, oh, okay, I get it. I want everything in that bundle. I'm just going to buy that one product. And then you can offer a small add on and it's not overwhelming, but you sold six products instead of one, right? And so, that's a great way to increase an order value. The second really amazing way is to offer a subscription. So, like if you
Hmm.
carry a line of products that are really reliable, your
Hmm.
customers love them, they come out with new products, monthly or so, you could set
Hmm.
them up on a subscription. So, offer for X dollar amount every month. If I were to order it, I would get one new device from, X company, right? And so I pay for it one time and I get one product every month until
Hmm.
I cancel. So that's a great way to introduce folks to your product lines, right? Especially the ones that sell well that people really seem to like. And how to get reoccurring revenue out of a customer that previously was like one here and one there. Now you have sales from them every single month. So subscriptions can
Mhm.
be really powerful in terms of increasing your ARR, your average reoccurring revenue. And it's a very smart model in virtually any space or industry.
Yeah, of course. And now, none of this matters if payments are not going through, right? So
Truthfully.
declines can quietly destroy a business
Yes.
if they are not properly managed.
Yes.
What are the most effective ways to reduce declines and improve approvals rates?
A lot of that comes with adding a product on the front end that does that exact thing for you. Some of it comes from putting limits on your shopping cart so that a customer can only run the same card twice, maybe instead of seven times,
Hmm.
because, look, folks don't always pay close attention, right? They
Sure.
go to a website, they see something they want, they put in their card number, it declines, and there's no clear message for why it declined. So it is smart to have a clear message for why that card declined. If it was insufficient funds, that's saying to your customer, don't run this card again. There's no money on it, right? If it's there was an error in communication, they're probably going to run that card again. So you want to communicate to your customer what the decline reason so they don't keep running that card and running that card because
Hmm.
we are monitoring transactions, right? We
Yeah.
monitor all of our merchants' transactions. And if you
Hmm.
go a day where you have um let's say 30 customers running the same card 7 times, those 210, give or take, transactions are going to flag. And your account
Yeah.
won't be shut down, but your processor should be calling you and saying,
Hmm.
hey, we noticed that you had 210 declined transactions. Is something going on? Like,
Hmm.
should we look, take a deep dive and investigate? Was there a problem? Was it, an issue with a specific issuing bank? That does happen. There are
Hmm.
times when a big bank, I'm not going to say a name, but like a
Sure.
certain big bank, their lines of communication go down for
Hmm.
an hour, hopefully not, but maybe an hour. And
Hmm.
any transactions that you tried to send to that one specific bank will decline because their system is down, right? But the
Hmm.
rest of your transactions went through. So there's a lot of reasons why it's smart to be monitored. I won't go into that now, just there are a lot. But you want to keep your declines to a minimum and there are some smart ways to do that.
Okay. Now, let's talk about flexibility.
Okay.
Today's customers expects options, right? And in the high risk, offering the right mix, this can dramatically improve conversion. How important is it to offer alternative payment methods like buy now, pay later, or high risk environments?
That's a slippery slope and it really relies on what data you have in my mind. I make decisions on data. I love data. I use it to drive every big decision I make in my workday and frankly sometimes in my personal life.
Hmm.
And so it boils down to the numbers. Like buy now, pay later for instance. Those are great services if you are a merchant who does fewer transactions but a higher average ticket. And here's why when you implement a buy now, pay later or a BNPL in our lingo, what happens literally in that transaction is that your customer puts an item in their shopping cart on your site. And instead of choosing pay now, they say, yeah, I want to use a buy now, pay later. Technically, they are leaving your site and going to that buy now, pay later site, filling out an electronic application and getting an approval that is then communicated back to your site. So you're eliminating your ability to upsell them at checkout, right? With a buy now, pay later because they leave your site. They're not staying there. So you have to understand the numbers. How much revenue do you make on your upsells? How often do people choose an upsell? And what does that do for not only your monthly revenue, but also your ARR, right? Because
Hmm.
if they're choosing a subscription at checkout as an add on, you would have to really impress me with some buy now, pay later numbers to get me to change that, because I
Mhm.
don't want them leaving my site. I want them staying there, selecting my subscription option, and then I have reoccurring revenue from that customer, right? But
Mhm.
if I'm a customer who sells, and an average car is $25,000, which would be lovely, but let's just say if
Yeah.
they want to use buy now, pay later for that, I'm okay with that because I'm probably not getting a lot of upsells equal to $25,000, right? And I want them to be able to afford the car. So it makes sense if you have a really high average transaction amount, buy now, pay later is probably smart. If you are an adult store where your average transaction amount is considerably less, probably realistically in the $100, $125 range, then you have to weigh the numbers. And you have to look at, if you're going to let your customer leave your site, which is smarter? Is it smarter to let them do that? Or is it smarter to keep them on your site, keep them in your flow, and let them look at your add on options?
How important is it to offer alternative payments methods like buy now, pay later in high risk environments? Okay. Now I'm going to move on with the next one. Now, Lisa, let's talk about when it's the right time for a merchant to start expanding internationally.
Well, again, okay, so here's another answer that would depend on data for me, right?
Hmm.
The first is, how much of your domestic market do you have already? If you
Hmm.
are if you're Ford, right, like the car manufacturer Ford, and you have, I don't know, I have no idea what percent of the market they have, but let's just say they have 13% of a very crowded market, expanding internationally then is probably smart, right?
Hmm.
If
Hmm.
you only have 3% of a not particularly crowded market domestically, then you should probably look at your domestic offering and make modifications to it before you expand internationally. Now, there
Hmm.
are some caveats to that. There are industries where other cultures really appreciate those products more than, let's say, Americans do, right? And you would be
Hmm.
smart to focus on an international market. Um, so it depends a lot on what you're selling and where you're already selling it, what your numbers look like, and then
Hmm.
what your product is. Just if it's smart to move into an international realm. And frankly, these days you can get so much information and so much data from searching that you
Hmm.
can figure out where your markets are pretty quickly and pretty easily. And if you
Hmm.
get information back, you do some searching and you get information back that mm, I'm going to make this up, but Italy is a huge market for your particular product, and you could
Hmm.
get a 15% market share in Italy, but you're only getting 2% in the United States. It
Hmm.
probably makes sense, right?
Yeah. Hmm.
If the reverse were true and you could only expect to get a 2% market share in Italy, but you've got a 15% market share in the US, I would say stick with your domestic offering, modify it a little bit, try some different messaging, try different
Hmm.
bundles, try a subscription if you don't offer one. Look at how get how you can entice your current merchants to spend more and, come back for repeat business, or how you can acquire new business in your domestic market.
Now, growing is not just about getting new customers. It's about keeping the ones you already have, right? And payments can actually play a huge role on this. Now, how can merchants build loyalty into their payments and checkout experience?
Yeah. This is really a good answer for both partners and merchants because you can build a lot of trust and loyalty and momentum as a partner by selling a complementary suite of products. So, usually, when I'm talking to partners, what I mean by that is, look at lending. Lending is a huge market, it's adjacent to merchant services. You can sell both products or refer both products, get residuals or some sort of income from both products. And the more finance products you offer, the more a center of influence you become, right? And the same Same is true for merchants. The more of similar or complementary products that you offer, the more a center of influence you are. So, how can merchants build loyalty into their payments? The first is use a loyalty product, right? Use something where folks accrue points or dollars back or something like that that encourages them to shop with you versus your competitor because they already have a relationship with you. The second is communication. Reach out, send very quick, easy texts or emails, messages of some kind to your customer base and say something like, hey, this month, if you spend $100 before Easter, we'll give you a coupon for May where you get $20 off your purchase, right? So you're encouraging them to shop this month and you're going to give them a discount if they shop next month. So,
Hmm.
theoretically, that's two potential sales you might not have had. Loyalty is a huge, huge, huge benefit for building repeat business and very smart. And your payments professionals, your partners should have some detailed thoughts about that. You should
Hmm.
also be able to use your payments to have an understanding of your customer, right?
Hmm.
So it gives you data about who your customer is, maybe some demographic data, maybe
Hmm.
some geographic data. Maybe you now know about your customer that your average person who spends the most is a woman between the age of 35 and 45, and she likely lives in a big city. Okay, well, now you know who to market to, right? So there's a lot of
Sure.
information held inside the payment space that you can use, from your payments dashboard. Some are better than others, but you should be able to at least garner some basic information from your dashboard to get an idea of who your customer is. And the more you know, the better you can market, right?
Yeah, absolutely. And in high risk verticals, what does being compliant really look like on a daily basis?
Okay, that's a big question too. So you want to be compliant from a technology standpoint. You want to make sure your security is in line. So the encryption and tokenization, like we talked about earlier. You want to build
Mhm.
trust with your customers by delivering educational information, being customer centric at all times. And so, I have always been trained and have trained people that the customer's need for education is paramount. That's how you develop trust with them, right? That's how you
Mhm.
encourage a relationship. You want them to know you and you want to know them. The more you know
Mhm.
about each other, the deeper the relationship, the more loyalty, the more they want to work with you, the more they want to work with you, the more they will. And so I have always been a huge believer that your current customers are your top priority, always, always, always. Whatever their needs are your obligations first and foremost. And then it's bringing on new business. And I
Okay.
feel like any merchant who behaves that way, and frankly,
Mhm.
any partner who behaves that way will thrive, right? And,
Mhm.
it is very important at the end of the day that merchant value is also value to our partners. And because we want our partners to shine and we want them to feel confident about working with us. And we want to have a good interchange. Sorry, Seg here. We want to have a good exchange with the merchant as we're doing our interviews with them, right? Learning about their business models. And so all of that is baked into building trust and loyalty and security and all the important things with your customers.
Now, when it comes about dashboards, how should merchants be using their dashboards to make smarter decisions?
It depends what information their dashboards hold. If,
Hmm.
if it's very simple and all they have is transaction data, look at the times when people are making purchases because you can learn then that, maybe people are shopping for your product at 3 a.m. and maybe you need to do more marketing in the middle of the night because that's when your customers are paying attention. Look at your average transaction amount. If it's $70 at 10 a.m and $150 at 3 a.m., that says some things about your customers, right? If it's very sophisticated data, it's going to give you some geography about where your customers live. So you know where to market. It's going to give you some data about your customers themselves. gender, income thresholds. There are some very sophisticated products out there that can help you analyze your dashboard. So it depends on how much your processor offers. But like even very simple dashboards, you can get some solid information from it. And that's a good conversation to have with your processor and say, hey, I've been using you guys for a year now. Could we look back at some of my statements or my dashboard and do some analysis so that I understand more about my customer? Right. And any solid processor will say, yeah, absolutely. Let's do it.
Yeah, definitely. Now, high risk merchants need partners, not just vendors, right?
Sure.
So
Sure.
when a merchant is thinking about long term, what should merchants look for when building a long term relationship with payments processors?
They should look for folks that are educated, that can talk about their industry and their product. And again, not only now, but down the road, right? They should be
Hmm.
discussing with you your growth trajectory, what your
Hmm.
plans are for growing your business, or frankly, if you're struggling to stay open, right? If there are ways to use payments to help you increase your revenue now, then that's a conversation you should be having with your processor. They should have the ability to underwrite your account, which means that they work with folks who want your business, right? Banks on
Hmm.
the back end who want to board industries that you're in. They should understand how important stable cash flow is. Because look, here's the bottom line. You probably wouldn't keep your doors open for too long without your payments processor, right? Because so much money moves digitally. And
Yes.
it is very smart. You have to know your processor. You have to be able to trust them. They have
Hmm.
to prove to you that they have earned your business. And, they do that by having smart conversations, by being invested in your growth plan, by being able to say, yeah, here's a smart fit for you today. And if you stay on this same path, here's some smart fits for you in 6 months or a year. You want to make sure that your cash flow is stable. And when you're underwritten, there's very, very little chance that unless you do something like remarkably fraudulent,
Hmm.
that a bank is just going to shut you down, right? Typically, they're going to reach out to the processors of the world and say, hey, we've got a red flag for this. Let's figure out why. Let's rectify it and move on. They don't just shut you down like an aggregator. So it's very smart that you are underwritten, that you have stability for your merchant account. It is very smart that you work with a processor that has a long history with those banks, that
Hmm.
the underwriters know your processor, they know to trust your processor, they don't send garbage, right?
Hmm.
And it's just smart to have a relationship that builds a healthy business credit report. And you only do that by working with an underwritten bank, right?
Hmm.
If your merchant account isn't underwritten, it's not helping you build smart business credit. So help yourself. Help yourself get a good business credit score.
Hmm.
And all of those things, help build credibility with you and your customer, both literally and, as they do their own investigation and check you out and see if they want to work with you, just
Hmm.
like you should your processor.
Yeah, that is correct, Lisa. And well, that brings us to the end of today's episode of High Risk Payments Playbook. We cover a lot of important information today. Lisa, thank you again
My pleasure.
for your time
Thanks for having me.
and for always having great information to share with us. And to everyone watching, thank you for tuning in. If you found value on this episode, make sure that you like it, you subscribe, and you share with someone who is in the industry and also can get benefits from these insights that we talked about today. I'm Rene, and this is High Risk Payments Playbook. We'll see you in the next one.
Yeah. Thanks for listening to the High Risk Payments Playbook. If this episode brought you value, share it with a partner or a merchant who operates in a high risk industry. For more insights and resources, please visit us at zenti.com. That's ZENTI.com. Until next time, operate with efficiency, process smarter, and stay ahead of risk.